Hi everyone, I hope you are all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 8, Illustration Sum number 3. When balance as per the cash book shows overdraft. From the following information, prepare bank reconciliation statement as on 31st December 2017 to find out the balance as per the bank statements. Let's read the particulars what they given below. That is, overdraft as per cash book 10,000 rupees, checks deposited but not yet credited 5,000, checks issued but not yet presented for payment 1,000 rupees, payment received from the customer directly by the bank 500, interest on overdraft debited by the bank 1,000 rupees, amount wrongly debited by the bank 300 rupees. Here we have to look 2 points, that is what they given to us and what they asked to us. So they given to us overdraft balance as per the cash book 10,000 rupees and we need to find out the balance as per the bank statement. So here everything you have to do opposite. When it comes to overdraft, the cash book and the passbook comes to negative balance. The balance already negative, so everything will be opposite. When it comes to overdraft, whatever is to be added, in opposite we have to subtract it. And whatever is to be subtracted, you have to be added, which means everything opposite. First we need to write the format of the bank reconciliation statement, that is bank reconciliations as on 31st December 2017 what they has given in the question. And you know we have 3 columns. There are particular columns, inner amount column and outer amount column, and you need to write the balance as per the question. The unfavorable balance, that means overdraft balance as per the cash book 10,000 rupees is to be entered on the particular column. Okay, we written it. Then the next transaction is check deposited but yet not credited 5,000 rupees. I will clearly explain you with the example. Okay, so checks deposited into bank but yet not credited, which means you run a business. When you sold goods to your customer through check, then you received check 500 rupees from your customer. Listen, after received a check, your business accountant immediately recorded in your cash book, which means whenever you received a check from your customer, your cash book will be increased, which means 5,000 rupees increased or 5,000 rupees immediately added in your cash book, right? Then only you will deposit that check into a bank. But what happened in a bank? The bank didn't clear it. It will take 3 to 4 days to clear a check. Okay. After clearance or collection of check only, your amount will be added or increased in your passbook. So the deposited check not yet credited means not cleared and there is no entry was made. So the passbook remains same. There is no change. The passbook remains the same. According to the cash book, whenever you received a check from your customer, your cash book 5,000 rupees will be increased immediately in your cash book. 5,000 rupees added in your cash book. According to your passbook, the deposited check was not cleared or the deposited check yet not credited. Your passbook remains the same. Okay. No entry was made. Now what we are going to do, we need to match up or to show the same balance with passbook as per the cash book. Listen carefully. You need to show the same balance as per the cash same balance for the passbook as per the cash book. So you have to add this transaction. Okay. So this transaction will be added. So in add column, check deposited but yet not credited 5,000 rupees is entered on inner amount column. We entered. The next transaction is the check issued but yet not presented for the payment 1,000 rupees. Which means, I will explain you with the example. Which means the check issued but not cashed. What the business accountant do? After issued the check, immediately the cash book will be decreased 1,000 rupees. That means you subtracted 1,000 rupees in your cash book. Okay. Why? Because you issued a check 1,000 rupees means you paid cash 1,000 rupees. So our cash book decreased. Our cash book subtracted 1,000 rupees. Okay, what happened in the passbook? The passbook remains the same. Why? Because the issued check yet not credited, which means yet not presented for the payment, not cleared. So no entry was made in the passbook. The passbook remains the same. According to the cash book, 1,000 rupees decreased. According to the passbook, no entry was made, remained the same. What we have to do now? We need to match up or show the same balance on passbook as per the cash book. Listen carefully. We need to show same balance on passbook as per the cash book. Okay. So for that we need to subtract this transaction. So on list column we have to write the check issued but not yet presented by the bank. 1,000 rupees will be entered on the inner amount column. We entered. The next transaction is the payment received from the customer directly by the bank, 500 rupees. The bank may collect dividend on its customer investment in shares and also interest on any investment. The entry for this will be made in the bank passbook on the date of collection. Like this, the payment received from the customer directly by the bank. So the entry for this will be made in the bank passbook. Okay. So the passbook balances increased because the bank directly received the payment from the customer. Okay. So the bank passbook will be 500 rupees will be increased. But what about the business? The business does not know that the bank received the payment. After seeing the bank statement only, the business accountant will comes to know they received the payment 500 rupees directly from the bank. Okay. So till that no entry will be made on the cash book. So the cash book remains the same. Listen carefully. According to the passbook, the bank received the payment directly. Okay. So the passbook balance 500 rupees increased, which means 500 rupees added in the bank passbook. According to the cash book remains the same. No entry was made. What we have to do now? We need to match up or to show the same balance as passbook on passbook as per the cash book. So what is on cash book? The cash book remains the same. No entry was made, which means we have to decrease or subtract 500 rupees on passbook. So on list column we have to write payment received by the customer directly by the bank, 500 rupees is entered on the inner amount column. We entered. The next transaction is the interest on overdraft debited by bank 1,000 rupees. So the interest on overdraft debited in the passbook only passbook only, which means it is a interest charged for the overdraft. Interest on overdraft means, debited means interest charged for the overdraft. It is a cash deduction. Cash or cash reduction. According to the passbook, bank balance will be reduced because bank charged for the interest on overdraft. So, in bank passbook will be reduced. So, 500 rupees decreased in the bank passbook. Okay, what happened to the cash book? There is no entries because it remains the same. Why? Because the business accountant doesn't know that they have been debited for the interest on overdraft. So the cash book remains the same. According to the passbook, the bank balance 1000 rupees is decreased or subtracted for interest on overdraft. But according to the passbook remains the same. Okay, what we have to do now? Now we need to match up, or we need to show the same balance on passbook as per the cash book. So we need to increase 100 rupees on passbook. So this transaction will be added. So in add column, interest on, we have to write interest on overdraft debited by bank 1000 rupees is entered on inner amount column. The next transaction is amount wrongly debited by bank 300 rupees, which means 300 rupees wrongly debited by bank, but which means by mistakenly 300 rupees decreased. Debited by bank means as per bank, debited means decreased. Okay, minus, subtracted, 300 rupees debited, okay, decreased. Okay, what happened to the bank cash book? There is no entry. Why? Because the business accountant doesn't know that they wrongly debited 300 rupees. So for cash book remains the same. Listen here carefully. According to the passbook, 300 rupees is decreased, but according to the cash book, there is no entry was made. Okay, what we are going to do? We need to match up the passbook as per the cash book. Listen, we need to show the same balance on passbook as per the cash book. So what is on cash book? Cash book remains the same. What is on passbook? Passbook will be decreased on 300 rupees. So as per cash book, we match up on passbook. So we need to add this transaction. This transaction will be added. So in our add column, amount, we have to write amount wrongly debited by bank 300 rupees. 300 rupees is entered on the inner amount column. So we entered all the transaction what they given in the question into the bank reconciliation statement. Okay, now we need to find out the overdraft balance as per the bank statement. So for that we need to add it from the add column, that is 5000 plus 1000 plus 300. We will get 6300. Now we have to add that 6300 with 10,000. We will get 16,300. Okay. Then let's take the sum of the subtracted column, that is 1000 plus 500. We will get 1500. We will enter on the outer amount column. Then we have to subtract. We have to subtract that 1500 from the 16,300. We will get 14,800. So this is the bank. This is the overdraft balance as per the bank statement, rupees 14,800. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.